Welcome to the deep dive. Today, we're jumping into the latest results from JK Paper Ltd, specifically for the quarter ending June 30th, 2025. That's Q1 FY26. Our mission, really, is to sift through all the financial reports, the board meeting notes, press releases, the dense stuff, and pull out the key insights for you. Basically, a shortcut to understanding their recent performance and their strategic moves.
Absolutely. It can be a lot to wade through those corporate documents. So we've done that heavy lifting. We're looking at the unaudited financials, both standalone and consolidated, auditor reports, the press release. The idea is to connect the dots, look beyond just the headline numbers, and give you that consolidated picture.
Okay, great. So let's unpack this. Let's see what's really going on behind the scenes at JK Paper. We should probably start with the big news from their board meeting that was held on Monday, July 28th. First up, they approved the unaudited financial results for Q1 FY26, standalone and consolidated. Standard procedure, but important.
Right. And alongside that, there was a pretty significant strategic approval. They got the green light for a proposed issue of redeemable non-convertible debentures NCDs, up to about 500 crore rupees.
NCDs, okay, so debt financing, what are they planning to use that for?
Well, the stated purpose is quite broad. Normal capital expenditure, so ongoing investments, long-term working capital needs, and just general corporate purposes. Choosing NCDs is interesting, It suggests they're confident about future cash flow to repay the debt rather than diluting equity. It's a controlled growth signal, maybe taking advantage of current debt market conditions.
Makes sense. And speaking of strategic moves, the other huge piece of news from that meeting, board approval for acquiring a majority stake in Borkar Packaging Private Limited, BPPL. That sounds big. Before we dive into that, let's quickly cover the top-line consolidated numbers for Q1 from the press release. Consolidated turnover, so revenue came in at Rs 1,784.88 crore. EBITDA was Rs 272.20 crore, and profit after tax, PAT, landed at Rs 81.23 crore.
Right, and that EBITDA figure, it's a good indicator of their core operational profitability before things like interest and depreciation kick in. What's particularly worth noting, I think, is the PAT, that bottom line profit. It actually increased sequentially by 7% compared to the previous quarter, Q4 of FY25. And this improvement happened even though they were facing some noticeable headwinds during the quarter. We can get into those.
Yeah, that 7% sequential growth is definitely something to flag given the market talk. And just for completeness, the standalone net profit was Rs 74.09 crore. Basic earnings per share, Rs 4.37. Okay, so that gives us the financial landscape, but let's circle back to that acquisition, BPPL. Tell us more about them. What did they do exactly?
Sure. So Borkar Packaging, BPPL, they're purely in the packaging products game. Specifically, they make folding cartons, corrugated boxes, and labels. Pretty comprehensive offering. They're not small either. They operate 7 plants across India. And their revenue last financial year, FY24, was reported at Rs 393.20 crore, so a sizable player.
Okay, significant indeed. And the deal structure is interesting too. JK Paper is buying 72% up front, with the remaining 28% to be acquired within 4 years. What's the thinking there, do you reckon? A phased approach?
Yeah, exactly. That kind of structure often allows for a smoother integration. Maybe aligns incentives over time, potentially linking the final payout to performance. And the strategic rationale, Sri Harsh Pati Singhania, the chairman NMD, laid it out pretty clearly. He highlighted that packaging conversion is, it's a really fast-growing area in the Indian paper and packaging sector.
Right. Makes sense to tap into that growth.
Precisely. And this acquisition fits perfectly with JKPL's long-term strategy. It gives them the ability to offer customers combined solutions. Think secondary packaging like cartons and tertiary packaging like the corrugated boxes. It's about becoming more of a one-stop shop.
Which builds stickier customer relationships, presumably.
Absolutely. Captures more of the customer's spend, creates a stronger competitive advantage. The expectation is this will really cement their top spot in corrugated packaging and push them into the top 3, maybe, in folding cartons. It's a major positioning play.
A clear push for market leadership then. And just so everyone listening is clear, this BPPL deal doesn't actually affect the Q1 financials we just discussed, right?
Correct. The approval came right at the very end of the quarter, July 28th. So the financial impact, the consolidation, that'll show up in future results, not this past quarter.
Got it. So while that sets the stage for the future, let's talk about what did shape Q1. You mentioned headwinds.
Yes, they did. The management was quite specific about challenges in the core paper and paperboard business. 2 main things. First, dealing with cheap imports. That apparently depressed their sales realization, basically. They couldn't charge as much for their products.
Pressure on prices.
And second, the ongoing issue of high domestic wood prices. That hits their raw material costs directly. So pressure from both the market side and the cost side, squeezing margins.
Hmm, tough environment.
And on top of that, their Serper Paper Mills facility had a planned annual maintenance shutdown during the quarter. So that outage also naturally impacted the overall consolidated performance for Q1.
Okay, so given those pressures, cheap imports, high wood costs, a plant shutdown, that sequential increase in profit seems even more noteworthy. What does that suggest about how they managed?
It does suggest pretty strong operational control, doesn't it? Maybe some cost efficiencies they found, or agility in responding to the market. They managed to absorb some of those hits.
Oh, and another point on comparisons. It's worth remembering that the current consolidated results aren't perfectly comparable to, say, a year ago. That's because during Q4 of last year, they integrated two other companies as subsidiaries, Radhesham Wellpack and Quadringen Vet Health.
Ah, right. So the group structure changed.
Exactly. The composition of the consolidated entity is different now, so straight year-on-year comparisons need that context. Good point. Okay, beyond profit, let's look at some financial health indicators. You mentioned key ratios. From the consolidated results for Q1, debt equity ratio 0.36 times, current ratio 1.84 times, operating margin 16.02%, and net profit margin 5.03%. Can you quickly unpack what those tell us?
Sure. That debt equity ratio 0.36 is quite low. It signals they're not heavily reliant on debt, which is generally seen as financially stable. Less risk.
Okay.
The current ratio, 1.84, suggests good short-term liquidity. They have, almost twice the current assets needed to cover their immediate liabilities. Healthy.
Private footing there.
The operating margin, 16.02%, shows decent profitability for their core business operations before interest and tax.
Yeah.
Reflects efficiency. And the net profit margin, 5.03%. That's the final bottom line. For every 100 rupees of revenue, they kept about 5 as profit. So taken together, these ratios paint a picture of pretty sound financial management, even with those market pressures we talked about.
Right. Financial stability seems okay. But shifting gears a bit, something else that really stands out with JK Paper is their focus beyond just the numbers. Their sustainability work, CSR. This is where it gets really interesting, I think. What are they doing on that front?
It's quite significant. They have a huge ongoing focus on social farm forestry. This is happening near all their plants.
Wow.
Odisha, Gujarat, Andhra Pradesh, Telangana, Maharashtra. And it serves two key purposes. One, it helps secure their raw material supply wood sustainably. Two, it boosts green cover.
And the scale is impressive.
Very. Just in this one quarter, Q1, they reported planting 3.07 crore saplings. That's over 21,600 acres covered. It's such a core part of their operation that they actually claim to be wood and carbon positive.
Wood and carbon positive, meaning they plant more than they use and sequester more carbon than they emit.
Exactly. Their forestry programs apparently outweigh their operational footprint in those terms. It's a strong claim.
Wow, that is a strong claim. And their community work, their CSR, seems equally extensive, covering 860 villages, 9 states, reaching almost 1.2 million people directly.
And the range of activities is broad, too. Things like women empowerment, education, healthcare, sustainable agriculture, rural infrastructure, natural resource management, even slum education, promoting art and culture, sports, plastic waste management. It's comprehensive.
It's not just talk either, is it? They seem to be getting recognized for this. Awards.
Yes, quite a few just in Q1 FY26. Their unit in Odisha, JKPM, picked up awards for Best Employer Brand, Occupational Health and Safety, Global Environment and Sustainability, and a Green Tech CSR India Award. And their Serper Mill in Telangana got an International Safety Merit Award from the British Safety Council.
So clear external validation of their efforts in safety, environment, and social responsibility.
Right. It reinforces that this isn't just peripheral, it's integrated into how they operate. So if we sort of zoom out and connect all this, JK Paper is clearly making these big strategic plays like the BPPL acquisition to diversify and really strengthen their market position in packaging. But crucially, they seem to be doing it while keeping this very strong, very visible commitment to environmental stewardship and social impact. It's a dual focus.
That's a great way to put it. So the key takeaways for you listening. JK Paper showed resilient financial performance in Q1, navigating those market challenges like imports and wood costs. They managed that sequential profit bump. They've made a really significant strategic move with the Borcar packaging acquisition, aiming for leadership in packaging conversion. And underpinning all this is a continued large-scale commitment to sustainability and community work, backed up by recent awards. So that leaves us with a final thought to chew on. What does all this mean going forward? With this major packaging acquisition changing their profile and these massive forestry investments making them wood and carbon positive, how might JK Paper actually start to reshape the competitive landscape in Indian paper and packaging? Could they change the game? And what impact will that sustainability leadership have on how the market, how investors see them? Does being carbon positive become a tangible growth driver? Something to think about. Thanks for joining us on this deep dive today. Keep connecting those dots.